Good day, ladies and gentlemen. My name is Bernard Pierre. I am one member of Team 7, and we are here to present Lennar Corporation, a home building giant, might I add. Now, Lennar Corporation was not always Lennar Corporation. Lennar Corporation was F&R Builders back in 1954. It was founded by Gene Fisher and Arnold Rosen. Later on, in 1956, Leonard Williams became a co-owner of F&R Builder, and him and Arnold Rosen combined their names to create Lennar Corporation. After 1972, it was listed on the stock exchange. It grew exponentially and it continued to grow and increase in scope until it was able to absorb Cal Atlantic in 2018, which allowed for its cost leadership strategy to continue to be better suited for the company. Lennar's market is made up primarily of first-time home buyers, mover-uppers, and multifamilies and active adults. Now, the mover-uppers, those are people that want to move from having a smaller home to a larger home. And when they mean active adults, they usually mean somewhere around the ages of 30 years old, which is the average for that time period. They build homes that are state-of-the-art facilities. They have all of the nice toys that come with their homes, but they fit them to be customized by the customer, allowing the customer to feel satisfied in the creation of their own home. And that allows the customer to feel part of their company, and that leads into what their corporate strategy is because they're a product diversification strategy, which is part of them creating their product for each individual person. And because of their economic scale, the economic scope of their company, because they merged with Cal Atlantic in a horizontal acquisition, which allowed them to be able to lower costs, it made it more efficient. But they still are predominantly making their revenue from home building, and that leads them to their single business strategy overall. Moving forward, my colleague will be taking over and he will be presenting the next section.
My name is Juan Bellini, and I'll be doing the external assessment. For this assessment, I chose 3 key trends of the general environment. The first one is an economic one, which is a key segment of the environment that determines the overall success of the industry. Now, from 2014 to 2019, there is an upwards trend of an annual industry growth of 6.2%. And for the next year, the expected growth is of 1.3%. One other thing that I wanted to touch upon was the housing market index. Now, the housing market index is based on a monthly survey of the National Association of Home Builders, designed to take the pulse of the single-family housing market. Now, what this does, it is a rating of how good the market's doing from 0 to 100, and the rating on January 2020 was at a 75, which is very good. Now, obviously, due to the pandemic, we're down to a 30. But nonetheless, this doesn't mean that the overall industry was going through a bad time. We're going through a pandemic, so obviously now the housing market isn't at its best. Now, the second trend was in the demographic environment. And this is because we're entering into a new demographic for buyers, which are the millennial generation. Now, there's certain things about the millennial generation that are different from others. One thing, for example, is that they like to buy homes that are built, obviously, by the builders without them having to do anything with the construction, right? So they desire homes built for sale offered by the builder, and this was from 28% of the population of 2007 to 41% in 2018. The third general environment trend was the sustainable physical environment segment. Now, this part is very important because it also touches upon the demographic segment as well. Now, based on our research, people are becoming more environmentally conscious, and they're looking for ways in which to help their carbon footprint. They're also looking for houses that have a low energy rating system and therefore create pressure on home builders. The last thing is the green building codes, which are codes by which builders must follow so that the construction and development of these homes do not harm the environment. Now, for the external analysis of the competitors, I chose D.R. Horton and Polter Group Inc. The core competency of D.R. Horton is integrated technology to streamline its operations and to build a very, very reliable supply chain, while their competitive advantage are the very large supply of unused land, which will be used for further building in the future. In terms of Polter Group, their core competency is automation of activities, which makes it easier for them to upscale or downscale certain products. Now, the competitive advantage has always been customer satisfaction and retention. Now, over to the opportunities and threats. I chose 3 opportunities that I think are very important for Lennar Corporation. One of them is green building, which may provide a new market which to serve, which again ties to the new demographic segment that's coming up as home buyers, which are the millennials. Another thing that I personally think is an opportunity for Lennar Corporation is the very low 30-year mortgage rate compared to previous years. I think the mortgage rate is an opportunity for Lennar because this means that people are going to take advantage of this to buy more and bigger homes since they can manage to incur the debt with such low interest rates. The third one is the increased innovation. Increased innovation for building products and smart technology can be opportunity since it ties into the demographic trend of home buyers. Integrating technology to homes is a great opportunity to get a leg up on the competitors. Now, the threats. As of 2019, there was higher wages for construction workers. This obviously will make the companies less profitable at the end of the day, but things like these happen all the time. Then there's higher demand for homes that creates even stronger competition and new innovative players. Now, obviously higher demand isn't a threat, but what comes with it may be a threat because certain companies like KB Homes are targeting very specific communities and they cater their homes to these communities. For example, they made a community exclusively for adults over the age of 55, which included stair elevators in their houses. Now, for the implementation of, for the major issue of strategic action 1, Lennar should hire experienced former employees to hold workshops and conferences to train future employees and educate them on the specifics of the business. This will help prospective employees understand the business, the company culture, and what Lennar expects from them. These events will spark employee loyalty, which also translates to further down in the future customer loyalty. For strategic action 2, Lennar's HR department can search for prospective employees around the world by creating surveys and offering online training programs. And to hedge against the possibility of the same people looking for jobs in the same industry, Lennar could create agreements so that they can commit to work for them after training completion.
Hi, my name is Jared, and I'm going to be covering some of Porter's forces regarding Lennar. The first thing that we'll be covering is the bargaining power of suppliers regarding Lennar. And the first note I made is economies of scale regarding their suppliers. One thing that Lennar does regarding building hundreds of thousands of homes and communities a year is ordering materials in large scale so that suppliers can operate through economies of scale, therefore getting raw materials sourced cheaper and having less margin for the next unit of raw material. The three biggest subcontractors that they supply to building their homes is architectures, engineers, and landscaping. And we found that they operate their contractors through long-term contracts. Another thing that we found as kind of a weakness and something that should be brought up is their dependence on subcontractors. And one thing that weakens them for that aspect is if a subcontractor fails his or her work, it could hurt the rest. So the next thing of Porter's five forces is the intensity of competition. So Lennar Homes, this was a 2018 number, they built 201,648 home sites. And in the future, they have the option of 68,623 home sites, which gives them a lot of guaranteed future business, guarding them against competition. And that's what we kind of mentioned as business cycle proof when going through doing some research on the company. When you have some sort of guarantees for future business, it kind of makes you business cycle proof. And if you forgot what the business cycle is, it's in the bottom right hand corner. So you have real GDP on the vertical axis and time on the horizontal axis. And you go through periods of expansion, you peak, you go through periods of multiple downward trends in GDP, which is called a recession, and then you trough, and then it kind of follows the line of regression. You'd hope in the right direction. One thing that was probably already discussed earlier, but we'll touch on it again, is their Cal Atlantic merger, which kind of puts them on the same level playing field as companies such as Pulte and D.R. Horton, which are huge home builders in the U.S. The amount of states Lennar operates in puts them on that same level. And with the Cal Atlantic merger in 2017, it increased their portfolio by 50%. And it really puts them on that same level as some of the bigger home builders in the U.S. So another one of Porter's forces to hone in on is the bargaining power of buyers. And with Lennar having such a big backlog, it gives buyers a lot of power over the Lennar's total revenue. 6.6 billion was their backlog, current backlog as of the end of the year of 2019. They had a 15,616 home backlog in 2018, and one of the opportunities that fed into that was the Home Investment Partnership Program from the federal level of government, which provided financial assistance to the state level from the Department of Housing and Urban Development to try to build some homes for people of the lower income bracket. Another thing on the right is a remodeling index from the Home Builders Index. It ranges from a scale of 0 to 100, and as of the first quarter of 2020, the remodeling index, the RMI, this is for the whole nation, by the way, not just per state, was at 48, and that also is a spot of opportunity for Lennar that is kept close eye on. So one of the last forces of Porter's model that Lennar associates with is the threat of substitute products. So like we said earlier, there's a strong order book for the long term with Lennar. And one thing I put down is the tract housing that the real estate market seems to be coming into towards the 21st century, where houses are pretty similar, and a lot of it's fought with over price and quality. So Lennar needs to walk a fine line between the two. And houses nowadays are pretty standardized, so the threat of substitute products for Lennar is pretty important.
Hello, my name is Josh Sosa from Team 7 here at Global Strategy and Policy. I'm here to discuss over the internal assessment of Lennar Corporation. To begin, some of their resources and capability include their ability to buy in bulk quantity, so that this way they can lower their per unit cost. Another thing that they also do is they provide financing with lenders so that they can get their customers in homes as quickly, as safely as possible, so they can equate the quickest revenue as possible. As we know, as the home market does take more time and growth. Another thing that they are very capable of and they have very high resources is their training. They have great training for their contractors and their workers so that they can produce the best quality of work, the best quality product and development in the process. Some of their core competencies that define them a little bit differently than their competitors are things such as the financial services. As D.R. Horton also have financial services, not all of the other competitors do provide this service, so this does set them apart of some of their other competitors. Another one of those is they are more geared towards move-up buildings. So what that means is that buyers that are looking to move into a larger building move towards a bigger property than what they originally have or what they currently have. Something that Lennar Corporation also is more on retirement homes and active adult communities, so they are more diversified than what their other competitors are focused more into. And more recently, they are also trying to enter into the multifamily market. This is a new part towards Lennar's Corporation and their business and what they're trying to do. And this also is a great segment to move into their weaknesses because it is also one of their weaknesses at the same time, considering that it is very new. It does not bring in as much revenue or as much profit as they are expecting, but this is because, and this is due to it being so new, it is still developing, and they are projecting in the near future to grow higher profits. Also, they're very dependent on the housing market and how it moves and how it affects Lennar. Is just like if we were taking in the example of 2018, Lennar Corporation, since they are highly dependent on the housing prices and how the fluctuation of the market moves, they will definitely feel a hit if the economy were to go downturn the same as it did in 2008. It would technically be also improving as the housing market does grow over the years. But another weakness that Lennar does face internally is their dependency on their suppliers, meaning that the suppliers have a lot of power, have a lot of bargaining power towards Lennar and their competition, because they can gear their profits. Some of the core competencies that Lennar Corporation has over its competitors are the financial service, as they do have a competitor that does have financial service that do provide mortgage and insurance and closing fees and titles and such. That would be D.R. Horton. None of the other competitors seem to have a financial service product, so this does separate them from majority of the rest. Another focus that Lennar Corporation does have is they're geared towards the move up section of home development, retirement homes, activity, adult communities, and more recently is multifamilies. Majority of the other competition are geared more towards single family dispatched homes. This also leads towards their weaknesses because one of their weaknesses is the multifamily section, as this is very new portion towards Lennar's Corporation. And due to it being very new, they don't have such high profit in this section of their business, as they are projecting for more in the near future. In the next 5 years, they're projecting for a higher growth. Another weakness that Lennar Corporation does face is they're very dependent on the housing market and how volatile it is, such as in 2008, We know the economy took a very big hit. Lennar Corporation was one of those companies that would take a very big hit because they're so dependent on the pricing and how the prices of the homes move. They're also very dependent on their suppliers. So as those change, they are very dependent on the pricing that they provide or that they're provided from their suppliers. And this really affects their costs and their overall expenses in their financial statements.
Hello, my name is Paul Marco, and I will be discussing the internal assessment for the financials of Lennar Corporation. At the end of their fiscal year 2019, Lennar posted over $22 billion in revenue. 93% of that revenue originated in their home building operations, which posted revenues of $20.8 billion in their fiscal year 2019. Now, this is on the low average of the industry, which is at around $35 billion. They make up for that, however, in reducing their operating expenses. So they have found competitive advantage in saving cost on rent, equipment, inventory, marketing, payroll, insurance, and even the funds that they allocate for research and development. Their operating expenses in 2019 were $19.75 billion, while the industry average was $31.75 billion. Moving on, I've generated 3 different tables that assess the profitability, the management effectiveness, and the financial strength of Lennar. Indicated in the first table, we see they have an operating margin above the industry average of 11.27%. What this means is that they are very efficient and higher than the industry norm at generating profits from their day-to-day activities. However, this does not translate into their gross profit margin, which is considerably lower than the industry average at 20.28%. Their management effectiveness has been assessed using return on assets and return on equity. Now, the return on assets are about at the industry average and are acceptable. However, their return on equity is considerably low, 12.01% as compared to 19.38% to the industry. What this means is that they are less effective at deploying their available resources to create returns on. Moving on to the last table, I have used the quick ratio and the current ratio to discuss the financial strength of Lennar. The quick ratio is more conservative measurement than the current ratio and includes all the current assets as coverage for the current liabilities. We see it's a little lower than the industry average, but still acceptable. Moving on to the current ratio, 6.2 is considerably high, which means that they are a highly liquid company with maybe plenty of cash on hand. However, having such a high current ratio could mean that they are not effectively managing their working capital in a way that it generates value for them. Hi, this is Paul here again to discuss the first major issue that Lennar Corporation faces, and that is their dependency on a volatile housing market. This is split into 2 different weaknesses. The first being an internal weakness of their dependency on the market. Again, 93% of their revenues come from their focal operation of home building. The next weakness is external, and that is the volatility of the housing market. Now, the housing market is subject to supply and demand just like the sale and acquisition of other assets. Your asset is your property, the land it sits on, etc. Now, another factor that can influence the volatility of the housing market would be interest rates or borrowing costs. When the interest rates are low, people are generally willing to take on more debt because it is not much of a burden to pay them off. Another factor that would affect the volatility of the market would be the supply of homes. Now, Lennar is in a tricky position where they cannot supply too many homes as to create a surplus, thereby lowering the price of each home. They have to keep that to a minimum, but at the same time, they want to be able to build these homes. Now, if we continue, we see that there are a couple of strategic actions to face these issues. The first being a diversification of subsidiaries to mitigate that risk. This meaning that they should branch out into financial services divisions. They have done so with multifamily, which is a little bit different from just home building. Apartment building is an entirely different animal. This would lead to an increased opportunity. However, there is not without risk of decreasing the performance of their focal industry, which is home building. They don't want to get too far away from that. However, they have to find a way to diversify to mitigate that risk they see in the volatile housing market. The second action that they could pursue is a vertical integration. Now, this would be the acquisition or the creation of development divisions as a way to purchase the land, develop the land, and then build on the land. And then the acquisition or creation of a construction division so that all of their employees are in-house and managed and trained the way they like it. Lennar Corporation subcontracts almost all of their development, all their construction. Again, they are at a 6.2 current ratio, meaning they have a lot of cash on hand. So while it is costly to implement and create a development division or a construction division or to acquire a development firm or a construction firm, they have the ability to do so.
The second major issue that Lennar may see, because it's a larger issue in the industry itself, is a lack of competent workers, or a poor labor market. To be blunt, a poor labor market could lead to damaging the company's intangible assets, such as their reputation. If you bring in someone in that has little experience and they do shoddy work, that shoddy work is what you're to that customer. Now your work is associated with that worker's shoddy work, and that gets pushed by word of mouth through everyone. Oh, don't go with Lennar. Lennar doesn't have a very good track record of having good things, and it brings out multiple customer complaints that would advise other people not to do business with Lennar, and that is not a good way to keep competitive advantage. Now, because they're experienced, they may even reduce the speed of projects, which would cost more money, because when the project is taking longer to complete, it's costing more. Now, the faultier work can lead to larger problems, because if you have something that was done incorrectly and it continues to grow mold, or because the structure was built incorrectly and not to the specs that were originally planned, they could lead to other problems, and those problems can compound onto each other, causing a bigger problem, not only for the customer but for the company in general. Moving forward, two strategic actions I think that would help with this particular situation is to create a mentorship program, and that will improve the quality of the workers. But not only improve the quality of the workers, it will allow for the company to brand itself as a community. Relations would increase, because it's giving the younger generation a way to learn from the older generation to improve their work ethic and improve their knowledge of how this trade would work. Now, the disadvantages of that is you could spend most of the time training these individual young workers, and they may get poached by another company, or because you're training those individuals, they may become a liability to the company because they're on the work site training at the same time. So it might slow down production a little bit. On top of slowing down production, there might be injury issues that may come up, but those are one thing. Those are things that come with the territory of being an apprentice. Finding a better labor from different parts of the world. Now, that is another extreme. You can go to a different part of the world, and there might be better prospects there. That if they were bought to the States, they might have a new perspective on how things are done, which could help improve the process, or they can be highly motivated workers because they're coming from overseas, and they have to make a living in this part of the world. The biggest disadvantage that you'll have with that particular issue is the fact that the government may not allow for overseas workers to come in, and that's been an issue currently in our government now. And it might not be cost effective to bring them overseas because you got to pay for a few things to bring them over, like their plane ticket, their room and board, and even the fact that you have to also pay for their visa to sponsor them so that they can stay here. They need a work visa in order to stay in the United States and work. These two are actions that can help improve. Now, I'll let my colleague continue the presentation.
After doing the research and analyzing Lennar corporations, we find the two best recommendations for them would be to diversify and to outsource. Diversifying in the sense, doing what they started to do in the last couple of years is to do a vertical acquisition so that they can pool into different fields so they're not so solely dependent on the building or home building operations. Not to take away from their main business, but just so that they diversify so that they can survive in harder times. Our last recommendation would be to outsource, that they look for labor outside into other parts of the world, outside of the United States. So this way it creates a stronger competition. This could bring in higher motivation. It could also bring in new perspectives, and not only it could possibly lower the cost for Lennar corporations. And this is why this would be our two strongest recommendations that they proceed with in the future.